Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and today we are joined by Dan Catinella. How are you, Dan?
Awesome. Thanks for having me, Audrey and Kevin.
I have a long, illustrious history of butchering last names, so
You
I'm
did
glad.
great. You did great. It's a tough
Oh,
one. Everybody wants to put the N there and say Cantinella. Cat is right. You did it. You did it well.
thank you. Well, I am taking Italian in a nod to my Italian from Calabria grandparents. So Catinella.
There
Anyway,
you go.
I know. See, I'm trying
Well
to make up
done.
for all the times that I've gotten someone else's name wrong. So just for starters, kids, it is
Oh wait, what's
last
something's
time.
happening today? I forgot.
We're gonna go with NMLS first, okay?
Oh,
Yes. So renewals opened last Friday. That was the first. Today is the 5th. There's something else going on. I can't remember what it is. But we do have a live class happening November 15th in Pleasant Hill.
for
We
the
will
slackers.
what?
For the slackers.
Slackers are doing this in December, Kevin.
That would be true, actually.
Yeah, it
That's
is.
the bulk of the industry then.
So you can still hold your head up high and take this live on November 15th. If you would like to avoid the biometric hell that we're hearing about, join us. So let us know if you are interested. We'll shoot you the information.
Can I throw my 2 cents onto that biometric
Well,
hell?
you're just going to tell everyone how old and inept you are, but go right ahead. Share
Well,
away.
I'll give people a tip too on biometric. So we teach the live course, so I get credit for the live course. But I also have an Oregon license, so I had to do an Oregon license. It was 2 hours. And it took a half an hour to get through the biometrics just to log in. It kept rejecting. And finally, I remembered something someone had taught me about the biometrics, and that is to do really straight lines and then write down on a piece of paper exactly on the blocks where you wrote your lines. So it's easy to repeat those. So try that if you're doing a biometrics.
I
for
just
one of your
love that we're
classes.
taking directions from somebody who starts with, it took me 30 minutes to make it happen. So I would,
Yeah.
we are
But
having,
once I did that, it took 2 seconds. Now, then I had to do the 2 hour course, and it took 3 hours.
right. I was
But-
going to say, how long did that 2 hour class take?
Yeah, and that was 2 hours of an AI speaking and reading government language, and including the numbers, Senate Bill 47321. It has
Okay, I'm about to take my own life just listening to you describe it. So I can't imagine doing it. Okay, so join us live. That's it. And make sure that you're renewing and log into NMLS ahead of time, because they might want you to do, oh, I don't know, credit report, another background check.
Yep, another background check. I had to
I've
do
had
that
to do
also.
all three in the last couple of years. So anyway, so they do ask you to do that periodically. Don't wait till the last minute, because we're hearing horror stories about that too. Just a little reminder that we're part of the Chrisman Media lineup. Actually, Rob and his buddy Rich did a really interesting interview with our former FHFA chair, Mark Calabria. Boy, his name was escaping me for a moment, so that was a little dicey. Anyway, it was really interesting listening to him speak. Okay, I'll leave it at that. But there's some interesting things out there. In addition to the 15th, on the 19th, we will be at the Basque Cultural Center in South San Francisco for a camp, California Association of Mortgage Professionals Harvest Festival. Festival? Is it a festival? Probably not.
A harvest festival and a mortgage
Harvest
world?
something or another. It's a harvest thing. Anyway, it's a fall get together, and we are going to have Julie Gordon with FHA with us on video for our show, which we'll be doing live from the event. And then we will have a soon to be announced speaker in the afternoon, and a trade show and a get together. People, there will be drinking. You're going to have drink tickets. I mean, if anyone's interested in that, I don't know. I mean, probably not, but maybe if you are. Anyway, but just come together and see other people and be in the same room with humans. So highly recommend it. Please join us, please, please, please. And with that, there's a few things going on this week. First of all, Kevin, can you please share the screen with us? Because we stay out of politics and I really just don't like getting into it at all. But occasionally there's something that's really important for you to see. And so just, yeah,
There you go.
at a national level, as we're thinking about today's election, I would like you to be aware of where it is legal to own a kangaroo. So
Kangaroo.
The green states, you can have a kangaroo legally without a permit.
Nice.
States that are orange,
Wow.
you can have a kangaroo if you have a kangaroo permit. In the red states, look at California, people. It's illegal. No kangaroos for you.
Well, but this is the first time I've ever seen California being a red state.
No, I know, me too.
Yeah.
Okay, so sorry, I had to.
All right.
Okay,
What's
moving
what's
right
the
along.
orange?
What?
What's the orange?
The orange was you can. Oh, please hold.
Oh, you can have a
Orange was-
kangaroo if you
yeah,
have a permit.
You can have it with a permit.
All right. All
Okay.
right.
So that they've actually created a kangaroo permit process. Now that's a little different than the person that had the squirrel, that had the pet squirrel that had it killed this week because they had a pet squirrel.
Yeah.
I heard, don't even remind me. I heard about that. That's horrible. Okay, so if you ever wondered about kangaroo courts, this gives you an idea. But the fact that we have had so many out of 50 states legislate whether or not you could have a kangaroo, and if so, how, is remarkable and a little disturbing. So moving right along. In other news this week, tomorrow we have today we had a 10-year note auction. Tomorrow we have mortgage applications and the 30-year auction. And Thursday, last but certainly not least, we have initial job claims and what was it? Oh yeah, the Fed decision. So what is
But you
expected?
hear about the Fed decision in another place, or it went from in Russia, their prime rate went from 19% to 21%. They were expecting at 20 to go into 20. That's a whole 1% jump. They went up by 2%. There is an economy that is not in good shape.
I mean, you're already at 19. What's 21?
Yeah,
I know.
it's 21. Yeah.
19, 21 of what? 21% of nothing is what again? So
yeah.
thank you, Kevin. That is some great
Well, you got to put it in perspective. It
yes,
could be
great
worse, right?
perspective. We really appreciate. Well, in other news, Nick Timrose has spoken. The Fed mole, as he has been
Oh,
dubbed.
yes, that was a great article.
Yep, there's a 98.6% Fed futures bet that they're going to lower the Fed funds rate 25 basis points on Thursday. Okay, so I would just like to take a little trip down memory lane to last month. Yes, it is last month now, where they lowered 50 basis points. And what happened, Kevin? What happened to the rates? What is
Rates
being
went up.
How much? Oh, 3/4. Yeah. So it'll be very interesting to see what happens on Thursday. Very interesting to see what happens after today. It's always just very interesting. We are in a very interesting business. So hold on tight, kiddies. Can I just tell you, I every day fall to my knees and thank God that I locked my purchase last Monday. Holy schmoly. I would have had 55 heart attacks by now and my client would have killed me. Well, yeah, it would all be bad. So with all that being said, so just hang on, guys. It is, as always, a volatile. God knows what's happening next. Hang on to your shorts week. So moving right into home price appreciation, which is doing what is normal for this time of year. Normal, it's moderating. Okay. So you're not seeing big jumps in appreciation. By the way, thank God. Who the heck wants to see huge jumps anymore? Not me. And in other news, we have $17.2 trillion with a T in home equity. That's an average of $319,000 per homeowner, $207,000 per homeowner of tappable equity, but also $38,000 average for debt for each homeowner. Like not mortgage debt, debt that probably is at somewhere between 24 and 32% interest. So make sure that when you are running scenarios, you are checking blended rates to make sure that you are doing the right thing by your borrowers. Yes?
Actually, you can go the other direction.
Of course. Tell us what
So
that is.
I had a client yesterday come to me. They're super shoppers and they've been to all these banks. And she had a 65 credit score, and he had an 800 credit score.
And she's shopping.
And they're shopping, yes. And
I
all the
can't
lenders are
pull my
telling
eyes
them.
back far enough. It's impossible.
So here was the best part, though. So all the lenders are telling him 7 something. And I did the math and figured out that he would qualify on his own without her. And so I just pulled her off the deal, ran the credit with thing, got a 6.5 or 6 5/8 rate. They're like, oh, you're the smartest of all the people we talked to. Let's go.
Hallelujah. And then also remember that with the GSEs, you can do a blended credit score, not for price, but for
Yeah.
qualified.
For qualifying, yes.
Yeah, for qualifying.
Yeah, that doesn't do you too good because most people qualify with their crappy score anyway.
Well, you're gonna have a hard time qualifying at 5 something, aren't you?
5 something, yeah. But
Yeah. Okay, so with that, moving right along, because it was a big week this last week. We had the BLS jobs report. Remember that? Yeah.
yeah, did you hear that they called it now?
Oh, what, Kevin?
Janky.
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 Wait, I
They're
always called
janky
it the
numbers.
BLS job report. Are you telling me that someone else named
That's the
it?
official term, janky numbers.
Okay, so let's talk about these janky numbers just for one little second, shall we? So
But
unemployment.
remind me though, what were the numbers last month?
Okay, so listen to this. So we were up 12,000 jobs versus the $113,000 job number estimate, right? There was a 2-month revision of 112,000 jobs. Remember last month when we had that humongo number of
Yep.
254? Yeah, that was revised down 31,000.
Wait, what did they come in at? 200 and what?
254 minus 31. And okay, and by the way, do you remember last month? Not only did we have a blockbuster, crazy number that made no sense, especially in light of all of the other BLS numbers and the QCEW numbers that came out for last year too. All of that, all of a sudden, it was sunshine and roses in the land of BLS, and everything looked beautiful. But then here we had it, 254,000 jobs last month, but we had a feeling it was going to not look like that this month, and here we are. So again, last month's jobs number was revised down 31,000 to 223. That is just the first revision. August, and remember last month we had revisions up for the better for the previous 2 months. August was just revised down from 159,000 to 81 by 81,000 to 78,000 job creations in August. And do you remember the last year's QCEW of 818,000 jobs that they overestimated over the year? Yeah, remember that? So, and then by the way, just for fun, sorry, Dan, I apologize. I hope I warned you enough about the fact that I may or may not be ranting about this. The birth death model, which is the bane of my freaking existence, that included 368,000 job creations. 368,000. ADP estimated 4,000. So they're pulling numbers right out of their Como Se Llama. I don't know if that means it's nothing. And so the numbers are a little, I mean, they're a little crazy from my perspective.
Janky.
And then, hang on, I'm not quite done. Almost, but not quite. Hang on. Where's the rest of my thing that I was going to babble about?
There was just a little hurricane in there last month.
Okay, so actually, now that you say that, yes, you would think that impacts it. But the states impacted by that showed the same, like they were not, it was not because of that, basically. So, anyway, bottom line is, I can't find the other thing that I was going to share with you, which is that 4.1%. It was rounded up last month and rounded down this month. And if you actually took the decimal points out, it would have changed. So anyway, bottom line is, BLS, we need to have a little intervention. I'd like to have a
I think they need to take a class on statistics and how to create numbers. That's really.
Listen, we've all read the book written in 19, whatever it was, 50 something that still stands up today, How to Lie with Statistics. Anyway, bottom line is just go get some loans, right? This jobs report is cray. I think the Fed actually gets it that the numbers are not quite what they look like on the surface because they are still very, how shall I put it? They seem to be
Janky.
Okay, who came up with that number, that name?
It came out of the article in the Wall Street Journal. That's where I saw it.
All right. So
Incredible.
I think that's the official term. The Wall Street Journal is calling them
That's
janky.
the Wall Street Journal prints it.
Yeah.
We'll go with janky. Okay, just a couple more things on jobs. Just humor me. So jobless claims initial were down 12,000 for the week and down 24,000 on the continuing claims, but the labor force decreased by 220,000 people. So they're not counting people who don't. So anyway, there's a lot of hair on the back end of these jobs reports, just so you know, and unless you take a dive into them, just don't take them at face value. So don't get too excited that we only had 12,000 job creations either, because who the heck knows what that'll look like next month. And there you go. All right. We also had PCE, which is always a biggie. It was about it. It's about what we expected, and we expect the numbers not to get very much better until January because they're replacing low numbers from last year. So anyway, so just and then finally, last but certainly not least, I read this and I had to share it. Do you know that Spirit Halloween, the spirit stores,
Yeah.
know that they employ 50,000 people seasonally? 50,000. I could not.
And they're the
seems-
reason
that
why the
seems high.
job went off, because they fired everybody.
Yeah.
50,000 people got let go on,
Well, so again, that's like a good, that's, why do they have seasonal adjustments? That's kind of part of it, right? But they're
Yeah.
also hiring right now for Christmas big time, or, whatever holiday you choose to celebrate. And
we need more holidays that require costumes. And then Spirit can do really well.
that'd be
I'm in
great for the
favor of
economy.
that.
Yes.
A
You
lot
don't
more ugly sweaters.
Oh, good God. In other news, complaints to the CFPB are down for mortgages, 8.7% the first 9 months of 2024. And so my question is thus, is this because we're behaving ourselves, or is it because people are super pissed off at the credit bureaus? Because that's where most of the complaints are being made. And TransUnion is the worst. They had 527,628 complaints in the first 9 months of this year. Can you believe
Wow.
that? So we can ask Mark McCardle, our friend at the CFPB, who will be with us next week on the show live,
Nice.
people.
I'm gonna write that down as a question about, hey, what are you guys doing about these credit bureaus?
Yeah.
Well, I think it all goes into some of the changes that are going to happen with the credit trigger leads, and
Yeah.
not having 17 people call you that you've never heard of before when you pull their credit.
So when
Yeah.
we have Mark on regularly, and he said the CFPB has a documented case of more than 96 pings from one credit pull. So they're well aware of it. They are hoping it will be handled legislatively. It is crawling through Congress right now.
Yep.
And so cross your
We've
fingers.
been following that closely.
What?
We've been following that closely.
Yep. Well,
A
Kevin
lot
and
of our customers leverage those capabilities, the ones that actually have a relationship with the consumer.
Mhm.
But their consumers get all this noise as part of a transaction.
Well, so there's a big difference, in my opinion, between a servicer or somebody,
Yep. Someone has a relationship with a borrower and a total stranger
relationships
that
different.
is actually trying to scam the people.
And there's a
Yep.
carve out for that in these bills. Kevin and I have been in DC numerous times when NAM was the organization that originally started dropping these bills. It's been year after year after year after year. Finally, the other organizations finally got on board, and finally there's a bipartisan bill, but it again, it's also stupidly political. It drives me crazy. All right, so Dan, enough of that. I mean, really, who cares what's going on in the economy, right? Right? Let's talk about what you do and what LOs could do to increase their business, shall we?
Sure.
All right.
Sure.
So you are the chief lending officer for, what is this thing on your thing? Total expert.
Total expert.
So in
Yep.
Dan's honor, last night, I figured out again, this isn't the first time, but it's been a while, to log into my Total Expert account. It was very interesting because it reminded me that's where we do flyers. So what I usually do is I call someone and I say, hey, can you make me a flyer? That's what I typically do out of my account. But now
You're one of our problem child.
I totally 100% am. So I'm the perfect person to talk to you, because how do you get me to engage in this? How?
First of all, a lot of it's about operationalizing your business. If we spend a lot of time on how do we optimize the customer journey and look at all the different touch points. Because the reality is everybody wants to grow their business, right? Well, growth doesn't always just come from acquiring new customers.
Right.
Let's look at the business you already have coming in the door. And if I said to you, Audrey or Kevin, hey, let's optimize your conversions, and if we increase your conversions by 10 to 20%, and I increase your pull through by 10%, and I increase your customer retention rate by 2x, because the industry average is pretty pitiful still at 20%. So 2x, let's just call it 40%. All of that, could equate to 2 to 3 more funded transactions every month per originator. Like, that's meaningful. And guess what? We didn't acquire any new customers. We just optimized your funnel.
Right.
So we spend a lot of time looking at the customer journey, looking at where customers are slipping through the cracks, and determine how can we optimize that. What are the right touch points and engagement strategies at every point in the process, from lead to customer for life. And over the last several years, we invested highly into data and intelligence as another component of that, because when we look at the industry average at 20% customer retention rates, there's just such a magnitude that we can improve that dramatically. And it is, at any tenure originator that has a large database, it's impossible at scale to stay engaged with your database constantly after that first transaction. So how do we use data intelligence and insights, things like, hey, maybe my customer that I funded that transaction did get their credit pulled by another lender because that referral partner may have, pushed them to another lender on that next purchase transaction, or that consumer lists their home on the market, or they're in the money for a refinance because you could save them 50, 75, 100 basis points on the next opportunity. All those things are great ways to engage customers. We even do things like life events. Somebody gets married, divorced, or has a child. That may not mean there's a transaction tomorrow, but it's a great opportunity for originator to re-engage at that time when something of that significance happens. Let's do it
It's
more.
likely something's happening within the year.
Right? I mean,
Yeah.
wouldn't you like to engage with your customer when those types of significant changes happen? It's just it creates sales activity, if nothing more. Continues to build that trust and loyalty well after the transaction, so that you make sure that you're staying, front and center with consumers at every opportunity that exists.
Okay, so I want to start at the very beginning. And it's something we've spoken about before on multiple occasions because it's so important, but so many LOs are terrible about maintaining one, which is the CRM. So within your system, there is a CRM, right?
Absolutely.
Right. Okay.
It's not, Audrey, it's not just a flyer generator.
I know. Okay, it's gonna get there. I have a whole, I have a thing in my head. Don't you worry. Not as dumb as I sounded just a few minutes ago. And I'm cool with that, by the way, because I think that for a lot of people who've been in the business for a long time, we have this wealth of knowledge, right? We have things that you can't teach, you have to experience to learn. But we have also done huge adapting over the years. And one of them is if you were trained like I was in a broker shop that wasn't a big bank with very set systems in place, and you weren't trained with a structure. You had to evolve to where we are today. And it's this constant evolution. And so that is what I've been. So I not only started off so old school and knock your socks off, but the amount of growing that I've done in this area would also knock your socks off. So there is the person who does our flyers for our show. She's known me since that time, and I was president of a state organization. And the tech conversations at that point were laughable, to put it mildly. And my interest in it was, oh, let's go with somewhere on the negative end of the spectrum. I couldn't have cared less. I just wanted to close loans, right? I have done a monumental shift and totally understand that it is a blend, not a monumental shift to where the tech guys are on the other end of the spectrum, which I think is also incorrect. There's two ends of this, right? You've got, I don't want any tech and it should all be tech. And I know in my heart, it is a blend of both human and tech. So with all that, putting all that together is a big feat. Staying on top of your email is a big feat. And also doing, as an LO, think about all the things we do. We're supposed to go get new loans, and we're not supposed to process our files, but we're supposed to process our files. We're supposed to stay on top of where we are. We're supposed to maintain relationships. We're supposed to be marketers. We're supposed to be a million different things, which is absurd, right? And also, by the way, we only get paid if the loan closes. And if some jackalope wants to go and refinance before the EPO is up, we have to give that money back. Okay, so if you really look at it from our perspective, we go to a conference, we have to pay ourselves. We don't have a corporation doing it for us. So there's a lot.
And we can't even write it off.
We can't even write it off because those tax cuts we had a few years ago eliminated our ability.
Oh, but by the way, that's going away.
Well, no.
No matter who the president is.
It expires. It's set to expire on January 1st, 2025. But I'm starting to hear rumblings about I mean, it'll be amazing if they don't extend it, but we'll see. I was just I just taught an NMLS class with a bunch of CPAs, so we'll see what happens with that. But anyway, at the very least, we should be able to write off our freaking expenses. Okay, so let's go with, yes, we're not all great at this, but we're learning. And if you're not learning, get on board, kids, because you must. If you want to stay
Absolutely.
relevant at all, you must get on board with this. So let's start with what the beginning, which is the CRM. You have to have a CRM, or a database. You must maintain a database. So what's the
Absolutely.
best way to start that, Dan, and how you maintain it, or how it's maintained?
Yeah, so we really try to make it as easy as possible, because a lot of people say, my LOs aren't fully engaged into the CRM. Well, what does that really mean? Well, I look at their logins and they're not spending their entire day in the CRM. Well, that's not our goal. Like we focus on everything that you said. There's a million things coming at you. You're on the road. You're trying to build real referral-based relationships. You're going to events. You're trying to embed yourself into the local community. So we pride ourselves in trying to figure out how little time you have to spend in the CRM with the highest level of outcomes that help you continue to grow your business and elevate, C originators to B, B's to A's. The A's will probably always be A's, but it really comes down. And if you look at what the A's are doing, a lot of it is just how they operationalize their business and how scientific they are about the things that they do and their intentions and how they time block their day. They're going to focus on prospects on Mondays from 9 to 11 o'clock. And they're going to use their database to understand and segment, hey, here's all my active prospects. Here's my pre-approvals that are expiring. So it's really looking at your database as one of your most valuable assets. First of all, you have to kind of ground yourself on there as my CRM is my database and it is one of my most valuable assets in your business. And then figuring out, how do I really, where am I going to get the most value of operationalizing my business and using my CRM to help facilitate that? Because we're not trying to remove the human element. We're trying to elevate the human element, use automation where it makes sense, but make sure that we're injecting those kind of trust, loyalty conversations as part of the process as well. So, taking baby steps, it can be overwhelming at first, but you really have to invest every week, spend time on a little bite-sized component that you think is going to drive more value to your business, and just take baby steps each day. And it will make an impact for sure.
So if I may just put a plug in for this, the fact that my clients get, happy 4th of July, happy whatever notices, that's because of Total Expert. And for my system, it takes all the information out of Encompass and automatically merges it in to Total Expert. Thank God. Because I mean, honestly, if they had to wait for me to log in, I mean, please.
Yeah.
At this point, though, now that I know how to log in, I'm like,
I gotta say, at least Audrey admits that she has a challenge.
totally.
I ain't even saying a word here, and
Yeah, his
I'm way
silence,
behind her.
his silence does not mean he has his together at all. It just,
Hey, integrations are key. Like if you enter things the same thing more than in one system, there's a problem there. So
Yeah.
we do spend a lot of time on deepening those integrations so that we don't want you spending time pushing keys on a keyboard. That's
No, that's
how
exactly
productive.
why I like it, because
and we don't
all the
want,
things that Audrey does, I do also, and I haven't done a thing.
wait, what?
I send out the birthday card announcements and the happy 4th of July's and all that fun stuff, but I never think about it. It just happens.
That was
That's
like,
what Audrey's saying.
that's
Yeah.
exactly my point. Okay, he's a little slow sometimes.
I am slow.
That's why
Like I was trying to point out, I am slow.
but every once in a while he comes up with something absolutely brilliant. So you just have to wait for it. Okay. So if somebody, let's say they have your system and now they have a CRM and they can export, they have some tech person in their business, which we do, thank God, because she's the reason that I have all my information in Total Expert, because Anna uploaded it for me. Now it's there, but then there's some random people that I don't have in the system because they weren't somewhere, right? So manually, do you just put them in manually and do a few
Yeah.
a day?
Well, now we are just releasing our native mobile app. So now, easier than ever, there's a Total Expert mobile app that you can have on your phone wherever you are.
Hallelujah.
Add a contact, add some basic details. You'll assign them to a group or a lead source. that could trigger a series of automation and things out to that, maybe new referral partner, maybe a new potential borrower, and things of that nature. So we really try to make that as easy as possible. And we know we've invested into this native mobile experience because we know that's really where, especially distributed retail originators, they're not sitting in front of their desk all day. They are out on the road, they're on the go. So we have invested a good portion into developing our mobile app, so that makes that process even easier than ever before.
What's the difference between an app and a native app? What's the native
I
part?
say native app because that ultimately means it's available in the app store. So whether you're an Apple or an Android user, it's in the app store. You can download it. We are releasing that to, all of our customers later this year. So we're pretty excited about that.
Great. So can I wait later this year? So it's November. When is that? So I can't get it today, right? But soon?
You can get it in about 3 weeks.
Okay. Will you
3
text me
weeks.
when that happens?
Yes.
So don't need
Yes.
to download the ones that are there right now, because there's a Total Expert Incorporated and a Total Expert
You
Accelerator.
can download it, just you won't be able to log into it until we kind of make it generally available to all of our
Okay.
customers.
But I should hit the download now, so 3 weeks from now, it's ready to go.
There you go. You're step
And
ahead
which
of the
one
game.
do I do,
Kevin.
the Accelerate or the Ink?
The not Accelerate one. The Accelerate's our event that
I'm
we
gonna say
host.
native. Just make it say native, and then we'll know what the hell you're doing. Okay. Jeez Louise. Okay, so you're gonna have an app. So can I just tell you that for me personally, I
Yeah.
love apps. Love, love, love. I hate emails. I hate websites. I don't hate them. I don't like them as much. But I love apps. So this is gonna be great. I'm assuming there is some easy way to use it. Click, 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 just like any Apple phone. Yes.
Yeah, super easy to use.
All right.
We've
I'll
got
be
some
the
great
judge of that,
feedback
David,
from the
and
originators.
I'll be reporting back. Let me tell you.
Please do. Please
You'll hear all
do.
about it. Okay. Okay. So
Speaking of noise, though, you mentioned, emails are kind of turning into noise too. So we're going to leverage the app for things like push notifications. So some of that high intent things that we want, make sure originators, kind of hit them in the face. We'll use push notifications. We've also invested highly into up leveling our entire SMS capabilities. So as we know, when you try to communicate with real estate agents, even via email, they're much less likely to open an email than a text message. So a lot of the capabilities around the app too will have two-way conversational SMS. So you can send a bulk message to a series of agents or customers all through the application. And then as you're getting responses back, you can respond to them and pick up that conversation through here. So something could start through automation, and then you could pick it up through here all seamlessly, through text messaging, which really is kind of the new engagement channel.
right, right. So it is, and so being able to communicate not just with your borrowers, but also referral partners, that's a biggie.
Absolutely.
And something that, again, would be wise to embrace.
Yeah.
Put it on your list of things to do in 2025 and start practicing in the next 2 months. So, I mean, really, seriously.
Hey, quick question from the audience. Do you download from KLX Point also?
We don't have an integration with a direct integration with Calyx Point. We're doing some things to try to serve the broker community more and go a little further down market from. But traditionally, we've been an enterprise system that typically starts at like the 30 LOs company. So if anybody falls in that range that's listening to this call and they don't think that Total Expert is suitable for them, I'd love to have those conversations. Because people just sometimes have the perception, oh, Total Expert, you're meant for the top 5 lender in the country, and that's not necessarily the case. We do serve 15 of the top 25 lenders. However, we do go and serve the mid market and lower end of the market as well. So we look at it at Total Expert to be able to solve and serve a lot of the lender partners in the community. We're working on some things in the broker community specifically just because of how they operate, and make sure that we can have a good experience for brokers as well.
So
Now makes up 16.37% of the market, 16.37 kids. So it is definitely important, especially these are the people that I worry about the most is the smaller shops. And not lower end, they're not lower end, the smaller shops, the little guys who don't have the budgets for compliance departments like a bigger shop would, or
That's right.
these kind of resources. So I love that you're working on that. So chop, because we need it. So let us know, keep us posted on when that is ready to roll out. Because I'm sure that there are brokers out there who want something like that, need something like this, but
Absolutely.
you know, if you don't offer it, that makes it difficult for them. So anyway, but it's coming.
We are working a couple partnerships that we know they integrate with, whether it's Calyx, Arrive, Lending Pad. So we, you know, a lot of like you, Audrey, like the data integration is key to the
It is.
success, knowing that originators aren't going to manually enter all
Yep.
these things. So that is one of the things that we're really diving deep into because, like I said, I want to make sure we're setting up that broker community for success when we do that.
Yeah, 100%. Yeah. In my opinion, they should be a focus so that they're able
Yeah,
to.
I actually think the last stats I saw was closer to 20% than 16%.
I
So we've
just read
definitely
that.
seen it on the rise over the last couple of years.
I just read that in Inside Mortgage Finance. That was those were their numbers, and they also were pointing out that Q3 of 24, that's now, 43.8% of all agency loans came from retail, but that
Mhm.
39.83% came from correspondent. So there's a lot of, you know, and a lot of brokers have that correspondent at part as well. They might not
Right.
be huge shops, but they're definitely not just pure, you know, purely brokers. So
For sure.
there's a need out there for all of us to be able to engage in the technology and everything that's available so that we all can all serve our borrowers the best way we can, right? So,
Absolutely.
okay, so good. So again, hurry up. All right, so moving right along.
Yeah,
Flyer.
cracking.
We talk a lot, Kevin and I have been talking about this year as far as when we're teaching NMLS, because we've learned that there are lenders who have compliant or they've vetted the marketing that is available. Because one of the things I worry about the most is, are your advertising pieces compliant? Are your communications with your borrowers compliant? And there are lenders who are providing that, which is great, as make sure you trust them and that they're not saying it's compliant and it isn't. But for you guys, what is your process for putting together a flyer, making sure that we're compliant? And how does it work if, you know, multiple states, and what do you do? Tell us about that.
Yeah, so because of how our dynamic nature of our platform works when it comes to content, we really deliver the body of the content piece, but the disclaimers and all of the interpretations that are sometimes a gray area for lenders to interpret, we really leave that up to each individual lender. We
Okay.
certainly have some best practices and things that we facilitate, but you know, compliance can be, and especially the regulations that we play in, there's definitely room for interpretation on a lot of them.
Yeah,
Especially,
sadly.
you know, you get into certain states, I'm not gonna, you know, well, we'll just call out maybe New York.
Right. Go
California
right
is
ahead.
always a fun one as well.
Right.
But there are certain
Washington,
states that
D.C.
just have interpreted things differently as well. So we do have a series of best practices. We set all of our customers up for success when it comes to compliance. But if there are some maybe more conservative interpretations of a certain regulation, our platform supports that. And then when we deliver what we call expert content, which is the content that we deliver to our customers as an added value, they basically just get the body of that content, and then it wraps their disclaimer, their brand, and all those components around that content. So really, we're not delivering necessarily compliant content. We're delivering content options that they can choose to use and quickly embed that into their own content that they may also create on their own. So for the smaller organizations, they're relying on our content pretty heavily. For some of the larger organizations, they have content teams in-house. They may choose to sprinkle in some of our stuff, but for the bulk of it, they're probably developing their own content internally as well.
Okay, so that's interesting because I gotta tell you, I don't know if it's coming from you or from some marketing person in-house, but I love a lot of the sayings that are sent out with the messages. Are those you or I'll have to find out. Do you know?
I would have to look at them, but your team is pretty awesome there. So I would say that I'm
Wow.
sure a good amount of them are coming from your team.
Oh, I never
Nice.
even thought to be grateful for that. I guess
And
I'll
you know,
have
Yeah,
to.
some of the
talk about
bigger,
that
you know,
one.
nobody wants to have the same content either. So most people do mix their own content with ours.
That's really important because you guys, what you said, you had 75% of the top 20 companies. So I don't want the same thing going out from to a client that is also getting,
Absolutely.
they went to
Yeah.
guaranteed rate or wherever they, happen to go to.
Although, you know what, frankly, if somebody's cheating on me and getting multiple messages from different mortgage companies, I just hope their computer blows. So it is just kidding.
You know that happens all day long.
Um, okay, so if somebody wants to upload their own content, they're able to do that into your system.
Absolutely.
Okay.
Yeah.
And just a little quick reminder, because this is another thing that we picked up in the last few months from our DRE commissioner in California. I'm curious as to whether other states have the same ability. California's Department of Real Estates will, if you pay them $100, they will review your advertising material, like your websites, and make sure it's compliant, which I
It's
mean,
huge.
because
Great
what
deal.
you don't want to do is wing it. Do not wing it, people. Do not send things out into the ether.
I had lunch with a small shop owner yesterday, and he mentioned, "Oh, we're small. No one's paying attention to us." And I'm like, "Oh, yes, they are."
Yeah.
We learned in our class a couple of weeks ago that the CFPB now is hiring people that are literally just focused on the small shops.
Mhm.
Yeah, we had a guy in there who's, I don't know, one of his kids, son-in-law, daughter-in-law,
Son-in-law, I think it was.
something or whatever.
Being paid $350,000 a year, all expenses paid, to just go around the country and check out small shops.
Broker shops. That was the first we have ever heard of this ever since they rolled out our little friends at CFPB. So again, we'll add that to our list of things to talk to.
Yeah, I think it's a great point, because I think everybody that's at that smaller level has always think that they flew
Yes,
off the radar, and
we did too. Yes. So yeah, we'll address that next week for sure and make sure we get an answer on that. But it just means, and again, even if you weren't being audited directly, your loans are at a correspondent lender and they're being audited. Someone's being audited, so your loans are being looked at. So whether you're, and your state auditors come into your shops anyway. So with all that
absolutely.
said,
And some of the requests that we see, small or large, just from auditors now, I mean, they want to see sometimes, hey, every email that you sent to a consumer in this state. I mean,
yes.
and that is one of our powerful pieces, is that we can provide all that entire audit trail. So an auditor comes in and says, yeah, here's what you wanted, here's an entire repository, and like, wow, you guys got that to us in a day. That's pretty amazing. So happier you can make auditors, sometimes the more unscathed you'll get.
Well, right, but we're also seeing different cases where they're going after people for what was said in an email. So it is another thing we've been talking about in MLS
Sure.
last 2 years, really, is,
Email etiquette.
I mean, hello, be a decent human is really kind of the crux of it, right? But so many people aren't, which is bizarre, and horrible. But anyway, again, they're looking at your emails, period. They just are. So I thought it was really interesting. Because you and I were talking a little bit about data yesterday, and we're going to get there next, but I saw a statement from NAR, National Association of Realtors. So the median, I just want to go through this, then we're going to get to how you're looking at data. Median age of home buyers is now 38 years old.
38. Okay.
And
I saw 36 earlier this year, but either way, it's crazy old.
Yes. Yeah. So it keeps going up. So it's gone up 11 years since 2020. 11. So it is so much. Yeah. So the total median age of all home buyers is 56. How about that? And the repeat borrowers is 61
Wow.
years old. So
yeah, that sounds like my first time home buyer, 61.
No, the headline of this article is, "Don't be surprised if a 61-year-old white woman buys your house." Okay, so which I thought was kind of funny.
And then they're ready for a reverse mortgage the next year.
Potentially, hopefully not, but potentially. Yeah, now oh God. Okay, that's a whole nother thing. So anyway, bottom line, and here's the other thing. Home buyers are increasingly childless. In 2012, 59% of home buyers had no children under the age of 18. The number now is 73% of home buyers have no children. The median income of home buyers is also gone up exponentially, with repeat buyers making at least 114.3, which is not surprising. But again, the number of people who are childless, who are buying homes, kind of debunks Dr. Lawrence Yun, our friend he's the chief economist at the National Association of Realtors. He came on and he's walking us through kind of the buying cycle. And I'm like, okay, if 73% of the people buying houses don't have kids, then really it kind of explains why the summer season wasn't quite what it usually is this year. Partly, maybe, I don't
It
know.
also explain why the median home price has gone down, because people don't have kids, don't need the big houses.
Well,
Yeah.
okay, well, and yeah, we're not gonna get started on median, geez Louise, that's a whole nother minefield. So anyway, it's interesting out there. First time home buyers are now down to 24% according to NAR, and it's a decade older than it was in the 80s. So there you go. And single white women, they're your buyers. They really are. They're, I mean, for sure, way more than single white guys, or not white. I'm sorry, I don't know why I'm saying white. I think I read white once. I just keep saying it. Apologies. Anyway, single women
Yeah.
are buying a ton of houses and way outpacing single men. So,
More responsible.
pardon me?
Women are more responsible.
Yeah.
Usually
don't
it's
do that,
the
but-
guys are buying the house because the wife told them to.
Yeah. So
Yeah,
anyway.
we know how it works.
So anyways, okay. So yesterday you were telling me about how you guys come up with your data, and it was a little shocking because I asked you, how are you able to figure out whether someone just had a baby? How are you able to figure? Okay, so walk us through that because it's a little shocking.
Yeah, I mean, each of the different data providers that we work with, so we work with a slew of different data providers, and when we evaluate them, you know, obviously there's a compliance aspect to make sure that you can do it compliantly. And we were talking a little bit about, you know, our life events data sources. So think marriage, divorce, had a child, income change, job change, all those types of life events that, listen, you should be having an engagement strategy around that, whether that's human, whether that's some automation. Maybe you do some, we have a lot of organizations that are doing personalized digital ads, retargeting. Hey, if somebody had a baby and got married, they, you know, if they log into Facebook or Instagram, they may see an ad about buying a larger home, things of that nature. So as we look at the data sources, you know, that one particularly uses a lot of public records data, courthouse records data, some survey data, even some magazine subscription data, and kind of aggregates it all together and comes up with an algorithm to ultimately say this consumer has a high propensity to, you know, have just had a child because they maybe subscribed to certain thing, or there's a birth certificate in public records now. So that's one of our data sources that we look at from a life events perspective. From a credit side, we obviously work directly with the bureaus to get some of that data of, you know, somebody had their credit pulled, or what the debt profile is, or, you know, maybe you couldn't initially credit qualify somebody when you know, took that first application. Well, let's not throw that consumer in the trash can, because that's what reality is. Most originators just throw that consumer in the trash can and never talk to them again. Well, let's incubate that consumer. Let's give them some educational content on what they need to do to improve their score. And we can do that all through automation. And let's also monitor that consumer. So when they do take those steps that you're educating them on, they improve their score up to your defined threshold. Let's call it 620, 640, whatever it is. We're then going to resurface that consumer back to you. So when I talk about how do we fill gaps in the consumer journey, a lot of it can be attributed to some of the data and insights, so that we make sure that no customer falls through the cracks. We're using those consumers to educate them, advise them, and build future pipeline for you. So those consumers that didn't initially credit qualify, hey, in 6 months down the line, 9 months down the line, that's going to turn into a transaction for you. So let's take those consumers that hit the trash can, and let's make sure we're doing the right thing by educating them and advising them. And data, we do believe, is a key source to be able to do that.
I did have a bad experience with one of those algorithms where I got a notice that my clients had listed a house, and it wasn't clients, it was a client. And I had just like closed her loan a few months earlier, and like, oh my God, she was so happy about this loan that I got for her. Like, why would you suddenly sell the house, right? And I call and I don't get any answer, and then I Google it on a whim. Just I had a thought, like, wait a minute, maybe she died and she's sad when I pull the obits. So it was really actually a really sad moment because like she was actually a longtime friend. That was how I found
Right.
out was from you guys that she had listed the property. I wouldn't have known otherwise.
Right.
I was actually able to contact, we had a pool of friends and they didn't know either. And I was the one who let everybody know that she had passed away.
Wow. Yeah, I
And
mean,
then they went to her
that's
funeral. That's
interesting.
awful.
Yeah.
Yes.
I
Well,
want to know what the algorithm would do with someone who, I think we should just run this experiment. I have my Science News subscription. I'm going to get a parenting subscription, Playboy, maybe a Penthouse letter. Do those still exist? I don't even know. And a Sports Illustrated and like, I don't know, People magazine. What are you going to do with that, buddy?
You get an OnlyFans subscription too?
What is, I don't even know what that is. What is that?
It'll just say it's the new penthouse.
Oh,
You should
oh,
know what that is, though, this day and age, Audrey.
oh, sorry. Yeah.
I don't want to know what that algorithm's coming back on you, but it may
All
not be more. It may not be a mortgage.
All
It
right.
may not be a mortgage.
I'm making a note to check out. What did you just say?
OnlyFans.
OnlyFans. Okay, so we're gonna check that out. We did hear about an algorithm. Okay, not an algorithm. Well, yeah, it was an algorithm. So a credit card company or finance company was tracking the consumer's behavior, and the algorithm decided that people who bought fast food chicken at 3 o'clock in the afternoon on Tuesdays were more likely to default on their loans. How insane is this?
Yep.
I can't wrap my brain around whether this is it good? Is it bad? Okay, so anyway, bottom line is you have a lot of resources for figuring out who's going to do something next. Yes?
Absolutely, yes.
Okay. So with all that being said, you aggregate all this in your system somehow. And then what do? You spit out suggestions on who you should call back or like what?
Yeah, we create what's called insights into our system. So insight fires, consumer may be in the money for a refinance, let's just say, because you defined, hey, this consumer could save 50 basis points or more. I should start engaging with them so that nobody else reaches out to them. I don't get nailed with the EPO penalty, all of those things, right?
Yeah.
So an insight comes into our platform and then we're able to orchestrate the entire engagement strategy. So maybe it's a notification to the originator. With that notification, I'm going to give you a script to say, hey, here's the best practice of how to, engage this customer verbally, if you have the opportunity by phone to do so. And then I'm going to orchestrate, maybe an SMS message to automatically go out to say, hey, I noticed that, the market moved. I'm able to save you for a refinance. Click here to schedule a meeting on my Calendly link. So a lot of the opportunities that we see could be SMS or email automation that follows up these insights that are very relevant to what that insight was. So, if you're not taking away the human element, you're kind of just elevating the originator so that they can do more. And one of our goals is, hey, we want originators to wake up the next morning. They got meetings set on their calendar that they did nearly nothing at. And then they have the personalized conversation, the advice, the trust conversation to close those deals as well. So use the technology to help orchestrate new opportunities, get meetings set, and then you guys, the originators, do what they do to close that transaction.
Okay, hang on. So people literally will just read something and click and schedule a meeting.
If they know who Audrey is and they trust Audrey, they're getting a text message from Audrey.
Okay, got it. Got
Yeah.
it. Okay, I thought you meant that it was like some random, like sort of cold calling thing. No, so this is like for people you know. Got
Yeah,
it.
Absolutely.
Okay,
Yes.
that makes way more
Yeah, I
sense.
think your
you
past
also have their
customers,
calendar set.
What?
yeah, you could embed your Calendly or Microsoft Bookings, whatever you use internally, right into those engagement streams, so that they can immediately just schedule a meeting with you.
Gotcha. I think it's interesting because I got a call from a realtor the other day and he said, hey, one of your colleagues had their assistant call to see if I wanted to do business with them. I'm like, what? Like, and he goes, yeah, I told him to pound sand. And I said, wait, just back up. First of all, do you remember the name? Couldn't remember the name to save his life. But also, it was the loan officer assistant. And I'm like, are people having their assistants call and say, I'm so-and-so's assistant? And then they think they're going to get some high producing realtor? That works? Is that a thing? I just want to know.
Not the first time I've heard that before.
I mean, is anyone out there doing this and it's working?
Yeah, they set up appointments.
Yeah.
The LO?
Think about it. Well, you get it from your doctor's office. You know, the assistant will call, not the doctor.
That's different. That's like
Yeah, well, you got to be
different.
act like a doctor and,
That's
have your
different.
assistant
Come
call
on.
and set up your
This is
appointments.
literally trying to establish a brand new relationship with someone. Not you're a patient already. I mean, for God's sake, that's like apples and like pineapples or kiwis, for God's sake. So they're totally different things. So anyway,
Varying degrees of success, I think, dependent on, how big the brand of that originator is in the community. I would say is what I would like, just use a Sean Panosian in his community. Like, he's pretty well known, #1 originator in the country, right? He
Okay.
has a team that could do that outreach to say, hey, listen, Sean's noticed the business you're doing. He would love to be able to support that. He'd love to set up some time over coffee to have a conversation about what he's doing to help support his agent partners. But I would say it's not the norm for sure of success.
Yeah, I would think. All right, so I would just like to talk for just a moment about the home price index. So appreciation levels are pretty stable, which is nice to hear. Inventory levels have risen a little bit, but still way below pandemic times. There are 6 states that have higher inventory levels than in 2019. But those states have also been the places where people have been moving. So Tennessee, Texas, Arizona, Florida, Idaho, Colorado. And so it would actually stand to reason. So I just want to make sure people are not flipping out because they're seeing inventories numbers rise and they're buying into the hype that the sky is falling. We're not seeing any evidence of the sky falling. And it is a great opportunity right now to go get loans. 28% of the debt that was incurred last December for Christmas is still on people's credit cards. 28%.
Wow.
Yeah.
It's a big number. So before the pandemic, my best month was always December. I don't know why. And
Yeah.
it
It's
hasn't
actually the
been.
month I got the most money and the least amount of work was done.
So with that being said, I repeat, do not coast through the rest of the year. This is the time to put new things in place, to start practicing new habits so they become habits or things you want to become habits, to embrace new technology, new systems. Do not waste this time. It's a great opportunity to get ready because, again, even though it has been a rough October, the trajectory on rates is anticipated to be downward in the next year and a half. So you want to be ready, and it is not going to be just having loans fall out of the sky and your phone automatically ringing. Is going to be directly proportional to the amount of work that you're putting into it. So with that, Dan, thank you so much.
Thank you for having me.
Appreciate everything that you shared with us today. We are all going to be reformed, and we are going to take such excellent attention to our CRMs, and we are going to continue because it's been on my list.
I'm going to be tracking you, Audrey.
Oh God, geez Louise. Okay, fair enough. But you
Yeah,
have
he's definitely tracking you.
Yeah, you know what?
Definitely.
You better pipe down, Casey. Just remember his name, Dan. Track him too.
I got him.
With all that being said, make sure you join us live next week. We do not put Mark McCardle's sessions with the CFPB, our sessions with Mark McCardle at the CFPB on YouTube. So you have to be there live to catch it. We hope to see you next week, 2:00 Eastern time, 11 a.m., whatever we're in, Pacific time, and anything in between. Have a great week, everyone. Thank you so much.
Thank you.